Debt to income ratio, that's another thing we have to look at. So how much money do you make a month? What is your monthly debt obligations? Is that monthly debt obligation, all those debt obligations added up equal to 50%, depending on the program, it can be a little higher, a little bit lower, but let's just call it 50% compared to what your income is. So say you make you make $3,000. No, let's say $4,500. But let's just easier. $4,500, that could be you and somebody else, a co-signer. So that's your combined income, and your combined debts are half that. And that does include the mortgage. So you have to include your mortgage into that because that is going to be a debt you're going to take on.
What other debts would be considered?
So you have student loans.
Okay.
And student loans are tricky because there's a lot of different ways we have to calculate that student loan debt obligation.
Okay.
Usually what we have to do is 1% of whatever is owed. So say you owe $50,000 or $20,000. We have to put 1% per month as your obligation, unless you're in a income-based repayment plan. And oftentimes those, you'll get proof from them that it's an income-based repayment plan. It'll show what your payments are. And sometimes those are zero. So if they do show zero, we can just blank out your debts on that. But student loans, car loans, credit card loans, alimony payments, child support payments. I think that's the basic big ones.
What about cell phone bill?
No. Utility, cell phone bill, babysitting bill, dog sitting bill, whatever, like
those are not
gardener bill
being considered on your monthly.
They're not. They don't show up on your credit report.
Obligations.
Exactly.
Okay, so that's important to know, I think.
Yep. And so you just have to add up all those debts. What is my monthly? It's very important. It's the monthly. So on your credit card, if you look at your credit card statement, it says your minimum payment. That's what you have to use for that monthly debt.
Yeah.
So add those up, auto payment, alimony, child support, student loan, credit card, all that. Boom, there's your monthly debt. What is your income before taxes? And then
before taxes,
not after, before taxes. You take your debt, divide it by your income. There's your debt to income ratio, and see if it's right around 50%. But you do have to add in a mortgage. So that's the tricky part. You got to figure out what would my mortgage payment, and there's all kinds of, you can go to bankrate.com. That's a good place just to figure out what would the monthly payment be on it.
For a mortgage calculator.
Or just a rough mortgage calculator. Exactly.
There's so many resources for those. If you have an idea of what the current interest rate is going to be, or if you're working with a lender, they're going to tell you around where you are going to qualify at.
Exactly.
And you can just plug that right in and know what you're putting down. And those are great tools.
The internet's an amazing thing right now. As everything.
So that stuff, I think it's really great that we can resource people to sort of figure that out on their own. Say it's a Sara who is like, this is too much information. That sounds hard.
Right.
Could I just call you and say, hey, Jim, or hey, Sara, I think I might want to buy a house. I can put you in touch with lenders. You can call Jim. Hey, Jim, I don't really want to do all this math by myself.
Exactly.
I have no idea.
This is a lot of information. So
I'm hoping I qualify. Can you just run some numbers for me? Is that something?
Oh, totally. Like everybody, we're all so busy. It's like, I don't even want to think about this, but I want to know. And so definitely, like if someone just calls me on the phone, I'll give them a really good, basic, rough estimate just based off numbers, everything on the phone. And then if somebody wants to proceed, we just do a loan application. We send it to them on their phone. You simply just fill it out on the phone. It's going to want to know what your income is. Things we have to have is your name, address, social security, date of birth, and stuff like that. And it'll go through all that. It's real simple. It takes 5-ish minutes, and then it comes right over to me. And then I can run your credit, and that will really tell me the exact numbers. But over the phone, 5-10 minutes, I can give anybody kind of a rough, here's your numbers.
That's awesome.
Yep.
So that's worth a phone call.
It is. Oh yeah.
And it's not a bother to Jim. No. I mean, I shouldn't speak for you, but
no, it's something that everybody wants to buy a home, but they don't know how to get there. And so knowledge is power. And if you make that phone call, then you're like, okay, now I kind of know where I need to go with this. And it gives you a plan. It gives you a roadmap.
And Jim can probably resource you with some tools.
Yes.
If it's a no, he can tell you how to make it into a yes.
Exactly.
Or it's a lot of people are qualifying for way more than they ever anticipated.
Yes.
Right now, because interest rates are so low.
Yeah.
It's so common.
Yeah.
That people don't, and they don't know where to start.
And it's overwhelming, so you don't start anywhere because you just don't want to deal with it.
Yeah. So it's one phone call to a lender.